Well, certainly Wall Street was happy with what happened today. It was very expected that the Fed did exactly what they announced today. Trump, of course, wants more rate cuts. Um, Look, inflation has come down and it's still not where we want it to be. We want it to be at the 2% Fed target. And so we're running about 2.7, 2.8. So there's still work to be done to bring inflation down. Of course, if you bring inflation down, affordability goes up. But look, this is a booming economy right now. It is so hot. Trump is right about that. And 2026 is going to be a monster year for growth and for incomes and I believe for equities.
If you were on the FOMC and a voting member, how would you have voted today? What would you have wanted to see?
I would have done exactly what they did.
You wouldn't
I
have
would have
gone
voted
50
for 40.
basis points like Stephen Myron.
No, I'm a little bit more of an inflation hawk than Stephen. I know Stephen, he's a smart economist. I lean towards making sure, I think the top priority of the Fed should be to make sure that we bring that inflation rate down to the target level. We're not there yet. And, look at as a political matter, Trump really needs to continue to bring that inflation rate down because people are still angry about prices.
Mr. Moore, it's really difficult to square the circle between being an inflation hawk and voting for or advocating for additional rate cuts when you see somebody like President Trump focusing so much on affordability, but at the same time calling for the Fed to cut rates even more. How do you really square the circle? How would you rationalize voting for a cut while also being an inflation hawk?
Well, I believe that Wall Street puts way, way, way too much influence and interest in Fed rate cuts. I mean, the short-term interest rate has become almost irrelevant. So I really don't believe that it's all that important, frankly, whether it was a quarter point or 50%, 50 points or doing nothing. I don't think that it makes all that much difference. We should have learned the lesson, by the way. What we excuse me, what we'd all like to see is for those mortgage rates to come down and the 10-year Treasury interest rate to come down. Well, the Fed doesn't control that. I know that may surprise people watching this. The Fed has no, impact on the 10-year Treasury or the 30-year mortgage. And we know that, by the way, for what happened in 2024 when the Fed cut the discount rate and what happened to the Fed funds rate and what happened to the mortgage rate and the 10-year Treasury. It went up. So I don't overly obsess about Fed rate cuts. I think we're in a pretty good look. The most important thing is this incredibly healthy economy. We've got hundreds of billions of dollars coming into the U.S. economy of foreign investment. We've got the highest S&P 500, the highest Dow, and the highest NASDAQ in the history of the country. People are making huge amounts of money, and this is a bet. When the markets go up, this is a bet that policy will be well guided and that American companies are going to make money. So I have a hard time really having much problem with the direction that we're going in with respect to this economy. And don't forget, starting in January, people will start to see middle income people will start to feel the impact of those big, beautiful tax cuts that passed in terms of less money deducted from their paychecks and taxes, and the no tax on tips, the no tax on overtime. Those are all positive features that will help middle class Americans.
That's a really interesting point that fiscal policy is going to be especially accommodative in 2026. And I think that one thing that's interesting is whether we're going to see monetary policy that's equally accommodative or even more so. And that's going to really depend on who we get as the next chairman of the Federal Reserve and chairman of the FOMC. What do you make of the White House's floating of a trial balloon with Kevin Hassett about 3 weeks ago, and then seeming to reconsider? If there's anybody in the world who recognizes how difficult of a process it can be to make it through the Senate, it's you. And so I'm really interested to hear what your thoughts are about what's going on in the White House and on Capitol Hill in terms of whipping up the votes to support someone perhaps like Hassett or Warsh.
I like them both. I think the two Kevins, I've been saying this for 2 years now, that, it should be one of those two as the Fed chairman. I also like Larry Kudlow, but I don't think Larry probably is in the runnings to do it, but he'd be an excellent Fed chair as well. But look, the two Kevins are monetary experts. They're extraordinary economists. I really, truly, either one of them, I think, would be fantastic picks. And I think they would also keep their eye on the most important thing that the Fed needs to do, which is defend the dollar. Defend the dollar, make sure that it's strong and stable. That's all the Fed needs to do. It doesn't have to worry about jobs. It doesn't have to worry about climate change or any of these other things. The most important thing is to keep prices stable and the dollar strong. And I think both would do that.
Steve, you have some great insight into President Trump behind closed doors. You know, he did nominate you for a Fed governor position. You ultimately backed out of it. But I'm just curious, what were your conversations with President Trump, or what insight can you give to our audience and investing audience trying to understand, read the tea leaves? Because we do have a president that most would agree that he's transactional. And so I think we're trying to understand that in terms of any appointments, is that seen as an expectation that you're going to do the President Trump's bidding and listen to him if you are at the Fed in terms of what needs to be done in cutting rates, if that's what he wants?
Well, look, my opinion is that it is valuable to have an independent Fed, but I also believe the Fed needs to be accountable. And in my opinion, it hasn't been accountable in the last few years. That's why we got, a 9% inflation under the current Jerome Powell. And so
wouldn't you say that 9% was the result of the pandemic and incredible demand? I mean, there were some, unexpected events
and
that created
fiscal policy too.
Fiscal policy. There was a lot of money sloshing around. Wouldn't you concede that 9% inflation, any president or any Fed chair would have had to deal with that?
Well, listen, I mean, I do think that Trump made a big mistake in that he passed a big, massive spending bill right before he left office. So you make a good point, but it was catastrophic. Everything that happened under COVID. We made the biggest mistake in the history of the United States in shutting down our economy, shutting down our schools, shutting down our hospital. It was outrageous. And I think we've hopefully learned that lesson that we'll never do it again. But you are quite correct that what caused the inflation, and I hope we remember this lesson for many, many decades to come, is that when you massively spend $4 trillion, guess what? You're going to have inflation. And it didn't stimulate the economy. It caused huge reductions in real incomes for middle class people. It destroyed middle class incomes. They lost massive amounts of money because we very stupidly printed all this money and spent it, dropped it out of helicopters. And that's a policy that's never worked.
So I want to go. Look, I think it's an important. You bring up a lot of important points about what happened during the pandemic and the causes of inflation. But to Carol's point, you do have this direct line to the White House and to the president. You advised him back in 2016. You advised him in 2024. How would you characterize your relationship with him right now? And to what extent are you, and how often are you speaking to him about economic matters that hit the United States?
By the way, I hope there isn't still a debate about what we did of COVID, because it really is important that we learn how incredibly inept almost everything that we did. And by the way, I'm in Florida right now in Palm Beach, and one of the few politicians who got it right was Ron DeSantis, the governor here, who did not shut down the Florida economy. And you had these blue states like New York and California and my home state of Illinois that shut down their economy. And that's one of the reasons the way these blue states have never really made a recovery from their tragic mistakes.
So yeah, and look, I don't think it's. I don't want to. We don't have a ton of time, so I don't want to rehash the past. And I think we could do an entire segment with you about that. And that's not something. It's not something that we're
lesson for people to learn, because it was we don't want to ever make that mistake again, right? We don't.
And hopefully we don't face another pandemic. And I don't think any of us were countering what you're saying there. Right. What I'm interested in is what you're talking to the president about right now. What is the line that you have to President Trump on economic policy?
What I tell him is that I think the tax cuts have been enormously beneficial, and it's not accommodative fiscal policy on the tax side. What it is, I mean, like one of the most important things we did in the Big Beautiful Bill was we are allowing businesses to instantly capitalize their expenditures and write them off instantly. And I believe that's one of the reasons we're seeing this capital boom in the United States. I mean, if you look at the last 9 months, capital investment has been really strong. as a result of this tax cut. So it wasn't really meant to just pump money into the economy. It was meant to incentivize through lower tax rates, lowering the corporate rate, giving expensing, lowering the individual income tax rate. Those are pro-growth, pro-supply side policies that actually help bring inflation down. I mean, it's very simple. If the economy produces more, prices go down.
Hey, one of the things I do want to go back to this idea of transactional, and again, I want to go back to the insight that you have in having had conversations with President Trump before he, made a nomination for you to join the Fed and be a governor. Because we've heard the president come out and say Jay Powell has been very bad for our country. He's terrible. He's a terrible Fed chair. I'd love for him to lower interest rates. I call him too late. I'd love to fire him. Tell us about, would there be pressure by President Trump with who he appoints for the next Fed chair? And would there be an assumption by the person who takes that position to kind of do the president's bidding? Give us some insight if you could.
Well, I'll put it a little differently. It's a good question. First of all, when I was nominated to be on the Fed, Trump never really, asked me about, well, would you cut rates or would you raise rates or so on. He had trusted in me as an economist that I would get it right. So there was no pressure to sort of do his bidding. Now, with respect to Kevin Hassett or Kevin Warsh, which I think there's a good chance it's going to be one of those two, what he is doing is picking someone. You say do his bidding. He's picking someone who agrees with his overall economic philosophy. And that's exactly what a president should do. I don't think that means undue influence on the independence of the Fed. But I think it's basically, presidents deserve the monetary policy they want, frankly, and so, I think they will do. They agree with Trump on monetary policy, and that's one of the reasons one of the two of them will be chosen. But I can't think of two economists I admire more than Kevin Hassett and Kevin Warsh.
It's interesting that you bring up President Trump's economic philosophy, because I think that if you were to press him to describe his economic philosophy with regards to monetary policy, he would just say he's a low interest rate guy. So is the expectation going to be from Kevin Hassett or Kevin Warsh that they will just deliver low interest rates?
You make a good point. The one thing that Trump has often said to me is that he likes low interest rates. And I've always said, well, Mr. President, low interest rates are good, but we also want to make sure we don't cause inflation. And so that is the kind of dual competing interests here. But I think he gets it that, what destroys a presidency is inflation. For whatever we saw Jimmy Carter lose because of inflation. We saw Jerry Ford lose because of inflation. We saw I think the major factor in this last presidential election was inflation. Americans hate higher prices. It's one of the reasons they're still in a foul mood on the economy. So I believe that Kevin Hassett and Kevin Warsh, either one of them will be an inflation hawk, and I predict we will bring that inflation rate down to 2%.
But one does wonder, since he's not running again, assuming no third term, that maybe he doesn't care if there's inflation. I'm just going to put that out there. Okay. I know you want to go somewhere else.
I mean, the Republicans certainly care, and affordability is going to be a key message for them for everybody in the midterm.
We shall see.
Hey, we only have 30 seconds left, Steve. I just want to take a sharp turn here because you are an economist and you watch what's happening closely. The U.S. taking a stake in publicly traded companies such as Intel, MP Materials, and others.
I don't like it.
Why not?
Hate it.
Why?
No, never. I've spent most of my career trying to privatize, not nationalize. So it's one of those issues I disagree with the president on. I believe in separation of business and state, and the less the government does to influence business decisions, I think the better.
You're old school that way.
There I am.
It's a different.
I hope it's not old school.
Definitely a different Republican Party, at least from a business perspective today.
I think there's a lot of investors out there too who
I think
certainly
so.
would agree with you.